Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the week ahead. Today, we're going to be looking at the gold and silver meltdown that is still in full swing. We've got silver off just about 7% on the early New York session. This trading week looks like it's shaping up to be just like Friday. I mean, you have massive moves really across the gamut of what we're seeing in the financial markets. I mean, natural gas is off 28% today. And I got an interesting question, about from a trader, a veteran trader in the room, a seasoned trader here in the How to Trade community. And the question was, does somebody know something? The Fibonacci retracements, he was doing some research, and the Fibonaccis have shown the ability to really predict big-time news events. And I go, I don't know that that's the case. I don't think Fibonacci's predict the news, but what I do know is that when you start seeing the caliber and the size and the depth and the breadth of these moves, somebody knows something. Now, we're going to get into the conspiracy end of the pool today because we sort of have to with some of the documents that were dropped from last Friday, and there was $6 million out of the Epstein files, you guys that are in the United States. I know you've heard it. If you're global, I know you've heard it, and we're not really going to break down what exactly the files say. There's a million podcasts and videos out there with people doing that around the clock. I'm not interested in that. What I am interested in is the fallout. What is going to happen to leadership in this world? What is going to happen to the financial leadership of this world? And are we going to see divestiture out of some assets and into other assets? I mean, there was some pretty damning stuff being released that involved Palantir. Palantir was in there. There was a lot of these companies, a lot of these folks that, quite frankly, haven't even gone through all the documents yet. There was, I think, an extra 3 million or 6 million. It's such an astounding size of the file, and it's hard to put our finger on what's going to happen. It felt to me like Friday was a bona fide panic. It feels today like Monday is turning into a panic. Now you say, Shane, but equities, but risk assets aren't crashing. And I go, they're not crashing, but our commodities markets are. And that right there concerns me for a couple of reasons. It has nothing to do with Trump's nomination for the Fed chairman, Warsh. Nah, this would not bring on this big of a market move. What we've got going here is a full-blown market panic in the commodity sector, and I thought that something like this could potentially develop for a while. But to see things like gold and silver absolutely falling out of bed and crashing, I mean, right now as a trader, you have to really question your conviction to the long side of these markets. You have to sit there and say, yeah, well, I love gold and silver, and everybody, and believe me, the institutions can do it. The hedge funds can do it. They can say, well, we still like the long-term prognosis for gold and silver. And I go, yeah, but you're off 35% in the last 8 hours of trading. I mean, I like the Titanic until it hit an iceberg. So I'm watching this closely. I think this is an incredible lesson in what the markets can do. I have several great questions. One of them from last Friday was brought by another seasoned trader. Say, hey, listen, I was in a position in silver. The market stopped. Do you remember that market pause? And then when it turned back on, I had a limit order, a resting order at the market. My order was triggered, and I was down a significant amount of money. And I said, yeah, when they start stopping the markets where they open is anybody's guess. So we've got to be very, very careful with what we're doing. If you want to trade gold and silver right now, I would say you can do it. But I would also say good luck to you. You've got to nail your entries. You've got to be very, very diligent with your risk. We did that last Friday with the scalping in the silver market. I showed you exactly how touch and go that thing is. And you've got to, if you're going to engage these types of markets, hit your entry point. If it's not there, you need to get out. You cannot let something that's trending as hard as gold and silver are trending right now. You can't let that take all your money away from you just because the ranges are big. Is it a good idea to buy silver right now? $78. It's hard to argue with that. A lot of folks loved it at 105. 36 trading hours ago. How do you not buy it, right? Well, if you're going to buy physical silver, that's one thing. If you're going to play it on the derivatives market, that's another. So you need to be very careful because the ranges are so big, you're going to get knocked out before it goes in your favor. And that's what's happened to traders. I've heard it over and over and over again. I don't want that to happen to anybody in here. Sometimes the game is just too dangerous to play. This is one of them. This is one of them. So good to see everybody back. Gordon Williams, good to see you. Good morning, good evening, good afternoon, wherever you may be. Bobby Bob. Hi, Shane. Welcome back. New month, new ideas, new executions. Absolutely right. On the Bitcoin USD, is the turning point to bullish? Yeah, we got to cover Bitcoin. We had a trade in there that sort of got washed out. Ralph H., good to see you. Ralph H., Andrea Garwal, Tuku, the How to Trade community. Good to see everybody back. All right, let's go ahead and get started here and see exactly what we got. Remember, if you want to trade anything, any of the ideas on, go ahead and click on over to Switch Markets. Thousands of markets, 24/7 customer support. We have a ton of resources that's pretty much growing by the day. EA tools for traders, free trading journal, market movers, pretty much everything you need. There's also just a bunch of some of these automated tools, which we're going to be releasing. I don't know if it's going to be this week, but it may be very soon. That 9 EMA strategy is all coded up and ready to go. The expert advisors, EA tools for traders, anything you need really is over there. So if you're talking about trading, your silver and your gold markets and your copper, even copper is going active now. I would highly recommend our risk management EA. Download the risk manager EA and calculate your exact lot size based on your desired risk to reward ratio inside of your trading terminal. That's what you need to do. I mean, if you're going to trade these things, because the ranges are huge, the volatility is huge and the risk is huge. And what happens in these markets is, I know that you guys can read your technicals, and I know that everybody can get in there and place a buy or a sell order. The problem is you're not going to be wrong with your buys and sells. You're probably just going to get shaken out of the market before it goes in your direction. And the reason why is because these swings are so big. So if you're going to trade gold and silver right now, even crypto to a certain extent, you need to have a definite grasp on your risk. Risk management EA can certainly help you with that. Good to see you. Tina Jing, welcome. Lewis, good to see you. Lewis, welcome. Eyes Hazy. Hey, Shane. Hey, Eyes. What's happening? All right, everybody, let's just get out to some of the questions at hand. We've got a lot going on today. We're going to talk about the news cycle here in just a second, but I want to get up to date on what really was really a rough run for the trade ideas. Not very well at all. We had a couple of ideas that were pretty good, and we just sort of missed our entries. The first one that we had here was Bitcoin. Now, we had a question about Bitcoin. Is it time to buy? Let's go and break it down. This trade idea was sort of designed to be bidding about that 85 level at 85.5 and a quarter. And you can see right here back on the 25th of January, which was, about a week ago. So you can see this pullback right down there, went to about 86. Didn't quite get us entered and would have paid us off easily. And then we sort of got messed up in this nonsense here where we got caught in this sweep that began on the 29th of January. We got a bit of a retracement, sort of a hammer formation, but we didn't break above the hammer, so the reversal didn't develop. And then the market just absolutely fell away during the weekend. This right here, 31st of January was Saturday. The low was 75,555. So right now, you're seeing some compression around 75. This long trade got swept out of the box. Why did it happen? We got caught up in that overall market crash on Friday. Not really sure if there's anything that could have been done about it. The only thing probably to do would have been to pull our order right after we got sort of what I call a proximity test, a test of 86. We're only down there, another $750, which is nothing for Bitcoin. We're in the neighborhood there. We just didn't get filled, bounced up. That was the trade we wanted. We didn't get it. And when you trade horizontal support and resistance levels, that's an occupational hazard. So let's get back to the drawing board right here and see exactly what we can build with Bitcoin. For me, I'm still a Bitcoin bull, but I'm not as confident that we're anywhere near the bottom yet. This has been a big-time sell-off, no question about it. First day of the new month, you're starting to see, or it's first trading day, Monday, first full trading day of the month, not a weekend day. You're starting to see bidders pile into the market. Now, remember, just because we base our trading decisions on 5-minute charts, 30-minute charts, a lot of the institutions don't do that. They say, okay, first of February, we like the way the crypto's going. Let's go ahead and bid this thing for the next 9 months. And that's what you're seeing today. You got a bit of a bounce, 2.5%. It was really a massive crash that developed there on Saturday, which was about negative 6.5%. But that 85 level finally gave way. That 80 level gave way. And now you're starting to see a little bit of compression in Bitcoin right around 75. I put a few things out on X over the weekend where I said, listen, the bidders need to be there at 75. If they're not there, you're going to be in big trouble. Well, they're there right now. Do I believe they stay there? I don't. I think that we're going to go ahead and test our next port of call, which I step back to 10,000 feet. I want to see exactly what's happening in these markets. Note, this pullback zone right here is what? 1st of April, 2025. That was your crash low. That was your big-time sell-off on the tariffs. Remember the tariff panic of last April? Well, we're having our own little early year panic right now. We might call it the Epstein panic. But this right here, this sell-off right here, we bounced hard off of 75, and now we're testing that level again. Believe me, the markets are watching 75 in Bitcoin very, very closely. extremely closely. It looks to me, in my humble opinion, that we're going to take out 75 and we're going to go for a little bit of a walk. Now, I don't think we're going to be down here very long. I really don't. But I think you're going to see some action probably down there in the 60s. So let's go ahead and pull up a long-term chart, which, is probably going to be useful for a lot of you just because you need to know the macro sense of what Bitcoin really is price-wise. Now, going back to 2017, before that, it was nothing. Very, very low. It was one of those things that people talked about, but it wasn't really what it is now. Bitcoin compression, then the break, and then the big pullback back in 2022, and then you got the huge year in 23, 24, and then 25, we sort of topped out. So what do you have? Well, it's not really a hammer, sort of a long-legged doji, but you've got a bit of you got a bit of a problem here. You're selling off to begin the year, and what do you have down there? You've got a low right around 74,434. That's your yearly low. Now, it's going to be a little bit different depending on your broker, but you need to mark your yearly low. Absolutely have to mark that. So I'm going to go ahead and mark it on this chart, 74,434. Once again, your number is going to be a little bit different than mine. So there it is. That's your yearly low. What's our low thus far this year? 74,532. We are becoming compressed right in front of last year's low. It's a big deal. That's last April's low. Got to watch this. This is very important because we need to understand that 75 level is more than just a big round number in this case. It's an area that's been tested and it's been defended repeatedly. We'll go to the daily here in a minute. What happens when it gives way? We don't just go a little ways south. We go a lot of ways. This is what we call a washout, and it's really starting to set up. You see right there on your yearly chart, sort of your spike low back there. Low was 15,549. I believe it was my first YouTube video ever. I made June of that year, and we called the bottom of it. We called the bottom of that Bitcoin market. This rally right here, if we do wash out, what is there? You got 50% level of this yearly range right around 70,800. That's big. And then you've also got 62% down there, 57. I'm not telling anybody which way this market's going because I don't know. I do not know. But here's what I do know. I'm not changing my mind on being a bull, but I'm also not stupid. Why should I step in here and buy this thing at 75,000 or 78,000 and try to invest thinking I'm going to get 125,000 when we could see a rapid sell-off down to the next quarter handle? Next quarter handle is 50,000. Be very careful holding longs right now. This feels very, very strange for what we've seen the last several years in cryptocurrencies. So right now, coming off, probably going to see 70,000, 62%, 57.7 probably is the buy of all buys down there. But if you wanted a great buy, it's down there at 40. Do you get that? Things really have to change for us to get 40. Is it possible? I think that last Friday showed us anything is possible. Let me see, 512 ELA. I like 65,000 for Bitcoin. Yeah, I mean, I don't disagree with you. I mean, if you're talking about 65 here, it's right in the heart of that golden zone, basically splitting the difference of that 50% to 62% on the yearly. This is a chart that we're going to be referencing because it's very important. This signifies basically the post-COVID era. Right there was the COVID, and then the money came into the system, big pullback, and we've rallied ever since in crypto. Interesting stuff right now. I think we've got an opportunity potentially to grab some crypto at huge levels. And this might be a 5-year discount. This really might be the 5-year cycle that we're looking for. As far as Elliott Wave goes, I don't see much on it. I heard some guys talking on Elliott Wave the other day. I didn't think much of it, but in a sense, there's your compression. There's your first real big move, and that took you from right around 6,000 all the way up to 67. So there's sort of your 1. That's definitely a pullback of 2. There's your 3. We're in a 4. We're in a 4. What's a 4? A 4 is a pullback. What's coming after the pullback? The 5. But when does it come? Nobody knows. Nobody knows. So let's just ride this thing out. Let's stay disciplined. Let's watch our levels. Don't do anything stupid. Don't rush in. Fools rush in. We've got time. We've got all the time in the world to make decisions with this market. I want to see it prove itself. We've come an awful long way not to test the water beneath last year's lows. If you do crack that 75 level, I think we're going to fall away rapidly. 70,000 will be the next big port of call, 50%. I don't really like that. You're going to get a lot of bidders there. You're going to get more bidders at 57, and then probably the institutional bidders are going to buy up most of the market down there if it does retrace to 40. A lot going on here for Bitcoin, though. It's definitely a mover and a shaker. I do want to cover Ethereum as well. I think that's absolutely huge that we understand Bitcoin's not the only show in town. What's going on with Ether? Here's your yearly chart. Much different than Bitcoin. Just an absolute, I'm not going to say it's a trash show, but it's definitely compression. I mean, there's your double top, sort of there's your bottom. So this is interesting right here. Double top's right up there at 48. So you had sellers, aggressive sellers, in front of 5,000 both times. Now, that's just a basic observation that really anybody can make, just looking at this chart with no technicals on it. Very simple. Boom. What's the top? 5,000. Okay, so we're thinking 5,000. We're about half of that right now, 2,500, 2,343. How could we possibly trade this thing? Well, I mean, there's a couple of ways to do it. Do you want to be a bidder on Ethereum or a seller? Well, I mean, it's not, we could see a big sell-off here. You could see a shot at 1,500. What was last year's low? Last year's low was right around 1,385. So I would have 1,500 somewhere on my charts. You could definitely mark 2,000. You could definitely mark 1,500, something right like that. Probably going to see some bidders down there around last year's low. That's what I would say for Ether. So for me, I'm definitely on the sideline right now. I don't want to sell it. I don't want to buy it. I don't want to do anything. One last thing out of the crypto sphere, and then we're going to go ahead and move on. Treehawk, good to see you, Tree. Welcome. Been a long time. How you doing? Trading well? Shiba Inu. This is sort of my pet rock. It's getting to levels that I like. I thought we were going to hit them over the weekend. The low right there was about 61.7 all-time lows, right around 55, somewhere in that zone. I really like this. This is a pretty good opportunity to maybe get into a potential shot of buying these all-time lows. I do believe a couple of things are going to happen with Shiba, though. It's a meme coin. It's an altcoin, whatever you want to call it. You could definitely wipe out these lows, flush a lot of those hodlers that have been retail longs. I mean, off the top of my head, the retail long would go long right now, right around those all-time lows. My guess is they get flushed. So I'd be looking at maybe a 5 flat, maybe a 4,500 here to bid Shiba. So I'm going to be probably getting active in Shiba here in the next several weeks. I want to watch this market. I'm not too worried about missing a move like we have today, which essentially is a 4% bounce. But the whole reason why I'm even considering taking this play, number one, I can do it in the cash markets. Cash markets are big for me because I can just throw my money down and hold it. I don't have to worry about margin calls. I don't have to worry about leverage or getting cleaned out on a big rundown. I've got time. I've got time with Shiba. We don't have time with our crude oil trades and our Forex trades and everything that's leveraged. We don't have time. We've got time in crypto, especially if you're doing it with cash. So for me, I look at something like Shiba and I'm saying, okay, this right here, I thought I missed the train. It went down to about 61.7. I'm not interested in that just yet. I want to see this market really prove itself. Let's see it go down and knock on 5's door. Somewhere down in there, 5. Now, by taking a position down there, the reason why I'm considering this is because the upside potential is explosive. I mean, it's not out of the realm of possibility where you show up one day and Shiba's up, 10, 15%. No question about it. You're already sort of seeing the potential of this thing buying a dead cat bounce and making some money. On today's trades, up almost 4%. I mean, these daily ranges are huge. All right, down 5. Look at down 5, down 5. What was that? Closed about down 6, but it was down big on Saturday. This runner back here in January, early in the year, boom, 8%, 9%, 11%. Big range, closed up 2.5, but at one point was up about 10. Those are big time trades. That's big volatility. So we're getting into the area where a person could make some money off a dead cat bounce. And what a dead cat bounce is when you take a dead cat and you throw it off a building, even when it hits the pavement, it bounces a little bit, right? That's called the dead cat bounce. That's essentially what you're looking to play here at Shiba. Is it high risk? I think everything to do with meme coins and altcoins is extremely high risk. There's no question about it. But the problem that most traders run into is with their thinking. Now, everybody knows buy low, sell high. We all know that. Okay, we know that that's the low. Anybody can do that on a chart. We're not reinventing the wheel. There's probably some of you that are trading order flow in crypto, and you're laughing at me right now going, God, your technical analysis is silly. And I go, call it what you want. Here's what you need to know about what's happening to price. There's your all-time low. Started up here, pretty much a pump and dump, right? Just absolutely just went to the downside. This is indicative of the insiders making all the money on the trade. No question about it. Here they probably got a hedge fund to step up and buy a share in Shiba right there, and then it just continued down to become the trash that it pretty much is. And then it just traded sideways, and then you saw the explosion of the top side. Some of these bullish months, you haven't seen a real big bullish month. That one right there is 50% back in 2024. Some of these months, 7%. Some of that one, 9%. My point is this. Do you want to buy right there at that all-time low? A rookie trader, yes. A novice trader would say, well, we still got pretty good volume. But you need to understand a couple of things. Number one, that's a big sell-off. You sort of troughed there. You tried to get a couple to handle going, and then you broke that way. You rebounded, and now the trickle effect has been on. You're testing that low. More than likely, you're going to break it and reestablish a new value area. Now, another thing that people get fooled into, they say, well, it's only worth a fraction of a penny. How much lower could it go? It could go a lot lower. Just because it's only worth a fraction of a penny doesn't mean it couldn't be worth even less of a fraction of a penny. So to me, I'm looking at a market that has absolutely no rules to it. There are no rules on how low this thing can go. So what would we have to do? We know that it's never going to go negative, right? Can a crypto go negative? Probably not. But could you start losing decimal points and trade between here and here and lose all your money? 1,000%. 1,000%. So what you want to do is try to time this market out. And something like a Shiba, high-level trading, extremely difficult. But you've got to keep your head on straight and say, okay, when's a good time to come in? Is it a good – well, the lows, the bidders have always been there before. Yeah, they're always there until they're not there. This has me intrigued. I'll let you know when things go active, that's for sure. All right, let's see. We got a bunch of questions here. We got to get into our traditional Forex conversation, and then also we have to cover metals today as well. But I did want to start with crypto because there was a lot of questions flying in on cryptocurrencies. So definitely Saturday was the big crash. You don't like to see financial markets crash 2 days in a row. We have three days in a row where there's been a crash. Friday, silver crash. Saturday, crypto crash. Today, Sunday, not much happened Sunday. Today, natural gas crash off almost 30%, 28%. Look at this. Silver's down 10% right now. We got to get out there. We're going to look at all that stuff here in just a second. Let me see. I should have decent sound, Tina, I think. Is the Euro USD going to pull back? Yeah, I think so. We're going to go ahead and take a look at the Euro USD as well. I'll pull that one up. Let me see. Swing trade concepts. Yeah, that's exactly what I'm talking about for Shiba. Swing trade, potentially short-term investment. Maybe looking at a horizon of 3 months or so. Potentially. Something like that. Beauty. Bro, good to see you, Beauty. Welcome. Tina, okay. Now, yeah, probably just cut out, Tina. We've had server issues like you wouldn't believe over the last several months. Let's see. Beauty and Chaos podcast. All right. Different this time, bro. It's not 2017 or 2021. No use case actually means something now. Yeah, I mean, we could talk about what crypto really is and get philosophical and talk about, well, what is it? No. I think that what you're saying is the speculation's over. No, it's not. Believe me, when you start talking about potentially the deregulation that you're going to get across the crypto sphere from the Trump administration, it puts all the altcoins back in play. And as far as an application, because Shiba is sort of that Dogecoin lineage, that's Elon Musk. It's not going anywhere. The question is what is it ever worth? Probably nothing. But you may get a good dead cat bounce down here. That's what I'm talking about. So use case, I'm not a programmer. I'm not a crypto whiz, but I know price. So that's why I'm looking at it. But interesting point, Beauty. Absolutely. Good stuff. Any contributions, I'm always open to listen. All right, guys, let's get cracking here. Week 5, 2026, it's going to be a big one. Monday, T-bill auctions, manufacturing PMIs. We're going to look at that in just a second. Tuesday, RBA interest rate decision. The RBA is slated to cut their interest rates. To hike their interest rates. I've been saying cut so long. Now they're looking at hiking. That's going to be interesting. We put out a trade idea out on the Australian dollar, US dollar. We'll talk about that in a minute. Wednesday, EIA crude oil inventories report. Crude oil is in an interesting position right now. You're seeing energies really fall off about 5% on the day. That's going to be your WTI futures contract. Interesting. Off 5%. Natural gas is off 28%. Those numbers are going to be big. They're going to carry a lot of weight this week because a lot of folks are trading crude and they are trading gas, apparently. Let's see. Thursday, BOE interest rate decision. We will look at the Great Britain pound. The pound is going to definitely be in play for Thursday. Wednesday session. Overnight U.S. Wednesday into Thursday. big for the BOE. We're expecting interest rates to be held firm there. We'll find out exactly what happens. Be sure to tune in. And then Friday, U.S. non-farm payrolls. I will be here live. We'll go ahead and fire up the band, and we'll see if we can get a few trades going on an NFP that I think is going to be extremely interesting. I don't know that anybody's left standing out after this week with silver going the way that it's going, and the U.S. dollar all of a sudden peeking its head up above 97 on the DXY. Interesting stuff. Lastly, this is going to be a big week, volatile week, a lot of market drivers. Stay frosty with your risk management. Don't get lulled into complacency or you'll lose a lot of money. All right, news of the day today, S&P Global Manufacturing, PMI, and the ISM. We covered these the last time they were out. They don't mean very much to me, and the reason why they don't is they're traditional metrics, they're textbook metrics, they're for academics and economists. What did they do for today? Well, they showed us that the potentially the manufacturing sector is kicking up a little bit higher for this year to open in the United States. The biggest thing I would stress here is that the manufacturing was supposed to take maybe a hit because of the tariffs. We heard that argument made throughout 2025 by the central bankers of the world and a lot of the talking heads out there. The tariffs are doing what? Well, they're not really doing a whole heck of a lot to destroy U.S. manufacturing. They're supposed to actually support that sector, and it looks like it may be working. So, once again, the jury's still out. Levels above expectations is what you need to know here. To me, I'm not interested really in trying to trade these numbers. I think they're for economists. If you want to be an economist, head on over to Wharton's, get your economics degree, and I guess write books and papers, essentially. Let's see, ISM manufacturing prices paid 59. 59 is beneath 59.3. That's a little bit more important to me because it does measure inflation, and right now all eyes are on inflation in the United States Federal Reserve and their new chairman incoming this spring, Warsh. We'll see exactly what happens there. But as far as this being a big news day, not really. Okay, news of the day, 3- and 6-month T-bill auction. 3.6%. That's the yields went up just a little bit, and you can see that 6-month held firm. We're starting to understand that this spring you're probably not getting your rate cut. I'll talk more about this as the week progresses, but at this point, you've really got pardon my language of French, you got a pissing match going between Jay Powell, who is your Fed chair, and those folks in the FOMC. You also have another FOMC member under indictment by the Supreme Court, I believe, for mortgage fraud. They were deciding if they could actually try that FOMC member. We haven't covered much of it. I don't remember her name offhand, but that's still pending. So you've got a real standoff going between the federal government, the executive branch, and the United States Federal Reserve. Do we expect them to cut interest rates during this cycle? No, I don't. I think you won't get your first rate cut until May, actually maybe June, after the new Fed chief assumes his role as a chairman. So interesting stuff here. 3- and 6-month T-bill auctions have clicked higher. 3-month is what I'm looking at. That yield is up a little bit, and what that suggests is that the federal government is attempting to attract money by offering a higher yield, and the idea is maybe there's not going to be as much cash in circulation. And what does that essentially mean? If you just reverse engineer it, it means that you're going to get hawkish policy out of the United States Federal Reserve. And that's one of the reasons why you see the U.S. dollar sort of ticking higher, starting to sink in that you're not going to get an immediate rate cut. I still say, and I stick by it, when Warsh takes the stage, when Warsh is the chairman, you're going to see aggressive rate cuts, even though supposedly he's a strong dollar individual. He's not going to get that nomination unless he wants to cut interest rates. All right, here we go. Let's go ahead and hit it up, Euro USD. Got an opportunity here. Monthly chart, interesting monthly retracement zone. Nice 3-month winning streak. One of these things that you could definitely look at. Huge month last month, sort of encapsulated December. December's very slow. We're going to go ahead and work from that low in November and a little pullback right there, maybe right around 117. Could be pretty good. We're printing 117.86. We took a shot right up there. Did not work. That one got washed out as well as we saw the chaos on Friday, which typically is the way it goes when things go crazy. But that area right there is not bad. So to answer Tina's question, is the Euro USD going to pull back? I don't think that it's going to pull back very long. I really don't. Eventually, it will start sinking in that this is going to be a dovish thing for 2026 for the United States dollar, but we're not there yet. We're just not there yet. And if we're not there yet, we got to be patient. If we do pull back, I would be looking at probably 117. I'm just not really interested in going short right now. I'm not interested in shorting. If you want to short, feel free. One way that you could do that is take this right down to a 4-hour chart, maybe something like this. You still got plenty of room potentially to grab a scalp here. I just don't believe you're going to get any meaningful trend develop. But then again, I mean, we're in a very interesting position in the markets. Spike high, spike low, maybe a pullback right up there to 118, 118.15, maybe 118 and a quarter, something like that might be a pretty good sell if you want to follow prevailing price action to open the week. Not really interested in that just yet, but I do like bidding 117s. I think we have a tremendous opportunity down there, potentially to make a few bucks. Will we get there? I don't know for sure. So thank you for the question here. Let's see. We got a few other questions, and I'm going to get into metals. Let me see. Yeah, let's see. Beauty. Yeah, it's interesting watching the DXY right now. DXY going up usually makes Bitcoin go down, but making all the metals drop. Well, the biggest thing to remember, what I would say, Beauty, and it's a good observation, is that your dollar index is still relatively weak. You're at about 97.65. So I would say if we got up above 100, then I would start believing that the U.S. dollar may be willing to strut for 90 days. But I'm not seeing that. I mean, you're up 0.5% today, which is a good move for the dollar index, and it absolutely crushed a Swissy level that we had as well. But what you have happening here is a market that still is trending south in a big, big way. Take a look at the dollar index real quick with our fundamentals, our technical analysis. Just step off to the monthly. You say, okay, we are up 0.5, which is great, but we've still got a serious resistance zone right up there. 38% of this move, 101. You've got a 13-month EMA up there at about 99. So that area right around 100 is going to be a big deal. It's going to be a very, very big deal. And you'll notice that what we had, sort of that big sell-off late in the month, low as 95.55, and then you saw the bounce. Is this a situation where the market has turned for the dollar? I don't think so. I think the dollar continues its trek downward, especially when we get into late Q2, Q3. That's when we're going to start seeing it. Let me see. Lita, hi, Shane. Can we look at the US 30? Absolutely. We'll look at the US 30. Let me see. Tina Shing, I've gone long, but in loss now. It's sort of slow out there. Just watch your risk on that, Tina, because there's a lot of things coming our way later this week, NFP being one of them. But as far as the U.S. dollar goes, I mean, I would be surprised if you get any sort of trend this week ahead of that. And then also you got the RBA coming on tonight with their interest rate decision. That could skew maybe some things across the majors because we're looking for a rate hike there. You've also got the BOE later this week, but I would look for the Euro USD to sort of digest the news from last week, the Fed's stance. We just got to wait and see. I know that's hard, but it's tough. It's tough to get a read right now on the dollar. I know it's depressed, and I know it's sort of flatlining, but it is bouncing, so we just got to wait. Let me see Andreas. Hello. Yeah, absolutely good to see Andreas. Welcome. All right, guys. Let's dive right in. Let's see. We had a request for the US 30. I'll cover the US 30, then metals. If there's anything else, feel free to dive right in. Throw your requests in the live chat, and I'll be more than happy to cover them. Okay, so the US 30 is simple. It's simple. It's one of those that you just sort of look at. You say, okay, what's the biggest, baddest number in the market? It's 50,000. So we did have a trade idea up there a while back. We were going to look to sell right in front of 50,000. Still am, but right now you're up about 500 points, 450 points. This monthly trend can't be denied. I mean, it really can't be denied. So if you take a look at this, you sort of got that spike low right there, and then you big run up. You'd love to buy pullbacks, but we're just not getting anything significant. Now, this goes back. This uptrend really comes off of last April's lows, last April's tariff panic lows. And since then, I mean, look at that winning streak. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 months of winning. That's no joke. You had a bit of a pullback here before a big reversal in August, and then it's just been the sky's the limit. And a lot of that's predicated upon the U.S. dollar potentially in line to be devalued. Trump said it many times. He said, the U.S. dollar was too strong, so they want to cut rates. That's going to send equities higher. No question about it. So we're sort of back on the bullish bandwagon here. If you're long, you're probably doing pretty well. As far as where could this market cease a little bit and get a little bit of that compression, right around 50,000. So I'm watching 50,000 as being a point of two-way action. We'll do a trade update tomorrow and see if this one comes in. But I believe we were looking to sell right there 49.9 and a quarter, 49.950. Give yourself an opportunity to grab a pullback there. Now, as far as what could we do intraday, let's take a look at the 30-minute chart. Interesting. Bullish break, opening bell, ding, ding. Volumes have sort of died down, and now we're pulling back a little bit. For me, this is an easy read. Fibonacci retracements right from that New York low, something like that. Pullback zone right around 49,130. Pretty good stuff. Might give you a late day opportunity as long as these intraday highs hold firm. Now, if we do extend to the top side, then we'll probably just move our Fibonacci's up. But I like a 38% buy today just because you're sort of trending. Just out of curiosity, let's back off to our 15-minute chart. What do you got? You guys know what you guys that have been with me for a while know what I'm going to look at. Look at that. Little 15-minute orb. Little 15-minute orb is doing pretty well. A little break right there. Got a little trend, a little uptrend. Not bad. Did you get paid really for your time? Nah, not really. You got a little bit. This trade's been in the green pretty much ever since it was taken. How would you manage it now? It's a challenge because Elvis has left the building. The participation's not there anymore. You saw a nice big bullish bump on the weekly open, and now you're sort of flatlining. Volumes are drying up. Now you're just sort of flatlining. So to me, it's still bullish today. No real reason to think that we're going to retrace and sell off. Something has to happen for that to occur. But big picture, we've lost a lot of the momentum that we had early in the session. We'll see if we pick it up late in the day. For me, the big thing that I'm looking at is 50,000. That's the level that needs to be on your chart. Expect a little bit of resistance right there. Will be interesting. I think we're going to get a great shot maybe to sell right in front of that 50 and grab a little pullback. Could be a lot of fun. That's for sure. All right, let's go ahead and get gold and silver. Let me see Divvy. Good to see a Divvy. Welcome. What currency pair is this? We're sort of skipping around a lot. We got a lot to cover here today. A lot going on. This one right here is the US 30. US 30 CFD. Interesting stuff. Okay, Australian dollar, US dollar. We got some interesting stuff developing the Aussie. The market chaos continues. AUD, USD is what's up next. I'm looking at 68.37, this 38% level on a pullback. Interesting stuff because we're going into that that RBA interest rate decision. The RBA is expected to raise interest rates during that Tuesday Forex session. That's going to be a big thing. Let's go ahead and wait. Let's be patient and see if we can get in there. By that, I mean, probably don't want to be holding positions into the RBA with the Australia dollar just because it's going to bring big volatility. But we may have an opportunity here potentially to play a level that's off the pace a little bit. Right now we're trading 69.42. So if we do get a big pullback, maybe 68.37, about 100 pips down there, that could be a very good trade. You got to think about it in these terms. Our daily range more than likely will have already been made. So if you do still get that pullback in that zone, not a bad one. That monthly level down there is really one that I'm looking at going into the RBA. Now, we could do a Fibonacci sequence like this on the daily to see if we get any convergence, and sort of there you have it. Right there. So there's your monthly level. Your monthly 38 hits with your daily 62. I love that. That makes me really happy. That's what I call converging indicators. And when they do line up for you, it gives you extra credence that is a big time zone. So I'm watching that closely. Also, this area, we're sort of getting compressed right around the daily 38%. You'll notice that I ignored this right here because this was a holiday session, 26th of January. Got a chance there potentially to trade. We'll see. That area down there, though, pretty darn solid. Australian dollar USD could be in play. All right, let's go ahead and take a couple looks elsewhere. As far as what we've been talking about with metals, crazy action in silver and gold. This will be sort of the crux of our weekly Switch On newsletter. So be sure if you haven't signed up for that, check it out. Go to Google Switch Market, Switch On newsletter, and you can go ahead and get signed up for it. But what I'm talking about this week is going to be silver and gold again. Then we're going to talk about Bitcoin, and then also probably throw another market or two in to see if we can establish some sort of consistency across many asset classes. That's what this is all about. If you can trade one thing well, typically you can trade another thing well. You just have to stick to your profit targets and your stop losses, have good risk management, especially in this environment. That being said, let's talk some silver. Now, I have to sort of add an extra disclaimer here. I don't want anybody diving into trades in the gold and silver market based on something I might say on one of these live streams. Now, I can outline you the levels and I can sort of show you what the market's doing from a technical perspective, but you have to understand that the risk profile involved in these markets is astounding. It is huge. You could really lose a lot of money, a lot more than you deposit. So you've got to be very, very careful with what you're doing in metals. If the market starts to go against you, there's no shame in getting out. Remember, we are trending to the bear. That's it. The bears are in control. All right, that being said, let's go on with our technicals. This is interesting, worth pointing out. I put this out on X earlier today. This is sort of your New York Open. This is your NYC Open, and that 30-minute bar dropped silver another 3.5%, 3.33%. And then you get this rotation. We had sort of this 920 EMA crossover strategy. You can see that we crossed the 9, crossed under the 20, and that set us up for a sell signal, and now we're just sort of rotating sideways. So a couple of things we need to understand. The low today during that U.S. session is going to be right around 75.33. The low that developed yesterday afternoon, sort of on the market open, or excuse me, going into the London Open, was right around 71. So there's a lot going on here, incredibly bearish. I don't know if you really want to take that sell because it's sort of expensive. I mean, there is so much volatility here. What do we want to do with silver? The first thing I would recommend is stepping back to 10,000 feet and saying, okay, what's going on? This is the situation that we're in. Cup with handle, remember that? Daily cup with handle, and then the market just absolutely exploded after that. Key level of 100. We didn't even stop for air at 100. We went right up there to 121 and then sold off big. And that crash right there was one of the biggest since it was the biggest crash in silver since 1980, down 26%. So now you got another pull off right there of about 8%. It just doesn't look good. It just doesn't look good. You're trading back into where that cup with handle was. So this is a challenge. If you didn't take the money up here, this is a challenge. So this is right here what happened with our technicals from last week. That is what you call just a widowmaker bar. That thing takes all your money and then some. So you got to be very careful to avoid those things if you can. The best way that you can avoid getting caught up in a jackpot like that is to make sure that you are always just taking your losses. When your stop loss gets hit, you're gone. That's all there is to it. So I talk a lot about dollar cost averaging. There's a lot of you out there that work with signal providers and you work with people that say, okay, well, let's go ahead and buy it here, and then it goes against you, and buy it here, and then buy it here, and build your position in at a better price than your initial entry. Eventually, you will run into one of these candles. You will. It's inevitable. If you do this long enough, you will run into one of those. And if you're buying, you got to remember, okay, let's buy. I want to buy my 38, and then I schedule in a 50, and then 62, and then 78. With your stop loss down here, okay, you lost everything, but at least you cut it off eventually. There's traders out there that bought here, and they're waiting for this to go up because their entry level just sort of moved down as the market did. Be very, very careful doing that. I mean, I can't tell you what to do. Don't do that. It's a certainty that if you do this, if you're talking about being in the markets for 5 years or 10 years or 15 years, you're going to run into these where the market just goes against you and it's like, man, that took everything I had. You can't let one day take everything you have. That's why we preach stop loss and we preach position size. Now, everybody's their own person, and you can make a lot of money dollar cost averaging in at the right times and catching the turning point. So for me, let's look at the daily. We went right down to that lower Bollinger Band. For silver, what's the smart play? Even if we're still bullish silver, what's the smart play here? Probably try to get with prevailing price action. Clearly we're selling. Spike high there, right there to today's lower extreme. Probably looking at 90, 60. Maybe a bounce right up there would be a great intraday short. Shorten from right around that 90 level. You know you're going to get more than, there's a high probability you get a bounce at least down there to 87, 88, 87 before the market continues up if it's going to. That's the first big thing. Now, the second thing you could do to trade this is step back and go to 10,000 feet again. And go, okay, what can we expect from this market in the near future? Spike low, April 2025, tariff craziness, all the way to your all-time highs, up there right around 121. Dial these in exactly per your broker and your levels, and your price points. But this area right in here, 63, it's big. The game for this, a lot like the game for Bitcoin, $75. There it is. As sure as I'm sitting here, $75 is the game. If 75 gives away for silver, you're looking at a big-time sell-off, and it's coming right down. It's coming right down to your neck of the woods, $63. Very confident of that. Monthly chart, what was last month's low? Low was 71.42. What's this month's low? 71.31. What do we call that? It's an $8 bounce from last month's low. That's called a failed auction. Instead of sellers there washing everybody out, there were bidders there. That's an extremely bullish signal. That suggests that there was a lot of discount buying beneath January's low to open February. That's big. We got to have that in our head. So the big picture and what needs to happen here is we need to be patient. Wait for this market to tell us what it's doing. Nobody knows right now what it's doing. A lot of folks are saying, okay, 75 has been defended. Let's go ahead and bid it and play to the long side. I don't inherently have a problem with that strategy. I really don't. If you wanted to buy 78s right now and put your back against 75, that's fine. Understand that it's two things. Number one, it's high risk. And number two, your stop loss is going to be right here. You got to get out under 75 if you're going to take the risk from here. To me, it's not good enough. It's not good enough trade location. I want the trade to jump off the page at me. I want it to pat me on the back and rub my shoulders and say, Shane, if we get this level, we are going to win. And that's what I'm looking for out of silver. I'm looking for not good trade location. I'm looking for perfect trade locations. So for me, 63, 62, if we get that, and it is very possible. Anybody that says it's not possible hasn't been watching the volatility in this market. It is very possible. So to me, I'm watching 63. If we get a big washout under 75, that's big. We went right down to $70, bounced back up immediately, $7. That was a great trade for anybody really that bought right beneath January's low. That's called a failed auction. The next 24 hours are going to be very, very big for this product. To me, I don't want to pick a direction right now. I don't want to sell on short time frames. I'm not interested in buying longs. But if I was going to make a trade, I'm not even going to say it because it's too high risk. You could buy it now and stop yourself out under 75 and maybe go for that journey, go for that runner back up to 85. You could do it, but you got to time it just right, and I just don't like it. I'm completely on the sidelines for silver right now. Let's talk gold. All right, we had a question about gold. Let me see. Tina Jing, be patient. Absolutely, Tina. That was a few minutes ago. I'm a little behind on the live chat. Do you think that gold can get back to 48.77? I have it in at 45.35. Well, yeah. Of course it can. I mean, if you're in at 45.35, you're doing pretty well today. You're up to 46.50. That's a nice move. There's no question about it. 48.77. Let's get rid of these technicals and have a look. A couple of things that are interesting here that we need to do before we'll get into the short time frames here in a second. But this was sort of the market call of the century, and everybody in the world saw it, but you didn't hear many people talking about it. I don't know why. That was your bullish pennant right there. Sort of there was your break, your 4-month break. And then this compression zone right there was the precursor for the run in gold. No question. Called it out at the time. Called it out all summer long as it was developing. So that area right in there told us a lot about where gold was going. Boom, it broke. It broke in a big, big way. And then you got the big gains, pretty much almost doubled in price since that point. Huge. We saw a bigger move there than we saw in the previous years in gold. So what happens now? Well, it's a legitimate question. What does happen now? Got a bit of a pullback this month, 5%. You can see that the trend is still extremely strong. But when you start figuring the losses that came off of those all-time highs, which were up there right around 55.98, and now you're trading at about 46, that is what about $1,000, so about 20%, something like that in that neighborhood. That's a ballpark, 55 and 46. So, yeah, let's just go ahead with 1,000 divided by 55. We're somewhere around a 20% pullback. Here's the kicker. It was a lot worse earlier in the session. So you were looking at a low down there right around 44.02. What could we game plan for here for gold? This looks like a normal pullback. Given the volatility and the scope and the size of these rallies, it looks like a normal pullback. So, can we get any money out of this? Is it time to buy? See, our 13-period EMA really has been an incredible predictor or launch point going back, well over a year. You can see that we haven't had a weekly close beneath that zone in a long, long time. So when we're watching this, we're saying, man, that goes all the way back to 2023. Yeah. So what do we do now? You'll notice the price bars for these weekly ranges are a hell of a lot bigger than they were. That means the volatility is extreme. What should we be doing? Buying pullbacks? Should we be selling? Still not interested in selling. Still not interested in selling. Got to step back to those yearly charts, believe it or not, like we did with Bitcoin. Say, okay, what's happening here? What is happening? 4-year range in gold. Big zone, 4,000, 4,081. Still $600 off. Quite a ways. It's worth noting where that is. But do you get that? Probably not. Let's go to a daily. Let's see if we can just get a trade right now. Oof, that is rough. That is a rough 3 days. Is the market trending? You have to say that it's trending over the last 3 days. Big picture, the macro trend is still bullish. So that's why a lot of the folks out there that are selling you gold and silver ideas are saying, well, the macro trend's still bullish, and it is. The problem is we don't know how low this thing's going to go. I'm down there at 38%. I would love a 4,100 bid. That's great. Still another $500 down the queue. Where were we earlier today? We're at 44.02. We're up $270 from the daily lows. That's astounding. That's an astounding move. That's huge. That is absolutely huge. Could you sell it right now for an intraday scalp? 48.53. Pretty good late day sell. Maybe somewhere right up there. 48.50, 48.44. Probably a good late day sell. You know you're going to get a little bit of action. The market's just not going to slingshot back against you. Probably a pretty good trade. Do I want to be long or short? If I had to be one way or the other, I won't even make that call. I'm not even going to make that call because I can justify holding longs just because of the macro trend. But I can also say, yeah, but I'm also not crazy. There's a ton of sellers in there. Is now the time to be doing this? It's high risk right now. I want to see the market calm down. I want to see rationality re-enter the financial space. It's not there right now. Things are crazy. Why are they crazy? We're going to cover that, and then we're going to sign off. Take a look at natural gas. What do you even say to that? 29.71%. 12.5% gain on Friday. 30% down on Monday. You don't have the money to trade that intraday. That's slaughtering people. That's, you know who's making some money and losing some money? People that wrote option contracts, that sold options on natural gas. There was a big Florida firm about, 10 years ago, optionsellers.com. The guy lost about $500 million of his clients' segregated funds doing this type of thing, selling options contracts. When you sell an options contract, you take the other side of the bargain. It means your liability is potentially unlimited. That's the kind of stuff that's happening right now. Believe me, there's folks out there that wrote or sold options contracts that are going to be living under the bridge because of this volatility. There's also some folks that played the other side of those options trades that just are going to go buy their new Ferraris. What the hell's going on in this market? What is going on with any of it? It beats me. And that's one of the rules of this live stream is, there's a couple of rules. I'll talk about them in a second, but we got to break down our technicals. Spike high, spike low, 50%. Why this range? Russia-Ukraine panic highs right up around 10. Look at that dip. A lot of reasons for that dip. We'll talk about them some other time. Most of it has to do with Russia switching to the ruble. Natural gas sales denominated in rubles, and then the ruble indirectly pegged to gold. Sort of took the air out of the natural gas pricing, but it had a lot to do with it. But this right here, 50% retracement. I don't play 50s, but look at that. Huge rally, then boom, big time sell. Be very careful with natural gas. That is about as chaotic gets. That's dangerous. That's dangerous. A couple rules on these live streams. Number one, if I don't know the answer, I will tell you. I'm not going to sit here and BS you. I have no idea why natural gas is doing what it's doing. I really have no idea why metals are doing what they're doing. I've seen a lot of explanations in the market. I've seen a lot of things. A lot of people believe potentially the natural gas action has to do with a Russia-Ukraine peace deal. They believe that. I don't know that to be the case. I don't see any prima facie evidence that is the case. They had some trilateral talks. Then you had a couple of offensive launched from each side. So I think peace is a long ways off there, if it's coming at all. We've been covering this for so many years now. I'm tired of getting my hopes up. Everybody wants peace, yet it's not happening. Why? Well, we're going to get into our next topic here in a second. The next thing I would say, why the chaos in the markets? CNBC's pretty much been saying that Trump's pick for the new Fed chair, Warsh, is going to be the big driver of the volatility right now. That's not true. I think everybody pretty much understands that the next Fed chair is going to sort of be simpatico with the administration, at least through the first 6 to 9 months. After that, I expect the guy's got a 10-year term. I expect him to get a mind of his own and do exactly what they want. That's what central bankers do. They grow into the role. They don't really ever take orders from anybody, but they are nominated under the pretense that, okay, you're going to do this. So I don't believe that. I don't believe that has anything to do with what we're seeing in the markets. I think those stories are clickbait. I don't believe that at all. The story here, there's another story that people are saying, oh, this could be a potentially big one. It's the U.S. government shutdown. Right now, you've got a partial government shutdown again in the U.S. government. You've got some obstructionists on both sides that are wanting funding pulled here and then added here, and it's just a joke. Bottom line is this one's not going to last as long as the last one. Speaker Johnson confident government shutdown will end by Tuesday. So clearly these guys are getting ready to cut a deal, and that's pretty much what's going to happen. And they'll reopen it, and you'll see that your government shutdown will be a short one. And here's the last 50,000-pound elephant in the room. Epstein files trigger political fallout across Europe. You have to think that this is playing a major role in your world of finance right now. Now, I'm not going to get into what happened here. Don't know. Wasn't there. People are stepping down. Positions of leadership are stepping down. Some of the emails that are surfacing show that Epstein had direct contact with politicians, with financiers, was actually helping them line up jobs after they were finished at their current jobs. There was all sorts of things in there. 6 million pieces of information, pictures, voice. There was a voice, an audio file that's been released. It's pretty damning. And it was Epstein talking to a honcho for a country and lining them up with jobs exclusively, like at Palantir, places like that. After they get out of politics, we have to think that this was the norm. You're going to see more people step down because of this. It's absolutely astounding what's happening here. This is just the tip of the iceberg. So when we're trading, we say, well, is the Epstein files causing the silver run? No. Are they going to cause something to happen? Yeah. People are going to start stepping down. I expect the names from the world of finance to start hitting the airwaves relatively soon. There's been all sorts of rumors about names that are coming out. You're going to start seeing folks insulate themselves as best they can from the fallout, and that means moving money around. That means maybe one of these funds or maybe a bank or maybe a big-time venture capitalist firm has a bunch of people that are affiliated in these files. And there will be investigations launched on the backs of what's in these files. Now, the burden of proof is always on the state. The state's going to have to be able to prove something, and a lot of it's inconclusive. Nobody knows what to believe with that much stuff hitting the wires. Absolutely nobody knows what's genuine and what isn't, but there will be investigations. Whether they pan out or bear fruit, who knows? But powerful people will be investigated. They will be subpoenaed. You've already seen the Clintons were subpoenaed. You're going to see that stuff continue. That could do a lot of things to our financial markets. In my opinion, that's playing into a lot of what we're seeing. This chaos in the markets is wild. It doesn't make any sense. Look, your VIX, your volatility index, is down 7%, and stocks are up, and commodities are crashing. Dollar index up, gaining steam. What does it all mean? Is it because the tumult is going to be sort of maybe relegated to folks outside of the United States? To people that are leaders, global leaders? Does that give U.S. assets more leverage to negotiate with? I don't know. I don't think so. To be honest with you, I think the whole system is going to take a major hit. A lot of powerful people are going to go down. That's the way that it is. But this kind of wild volatility, it was put to me very simply. Shane, what's the reason for this volatility? I was asked that question. And then the next comment was, it looks like somebody knows something. And I agree completely. Somebody knows something. We are not getting the full story here. We don't know what's going on. The wild swings in your commodity markets tell me everything. You shouldn't be seeing these types of swings. Pullbacks are one thing, and we showed you the macro charts for gold and silver. So these sell-offs, they aren't the end of the world for those assets, but they are huge. Natural gas, 30% moves in a day. This kind of chaos suggests uncertainty. It suggests things like war. It suggests political upheaval. Watching Iran closely. Didn't even touch on that today. We'll have to cover it tomorrow. We're out of time for today, but this is going to be a big week. NFP Friday, big one. RBA during the night. Tonight's overnight. If you're trading the Australian dollar, be ready for it. Thursday, Bank of England, BOE. We'll cover it when the time comes. Be careful with the BOE. NFP Friday, NFP Live. We love NFP. NFP is going to be a blast. We'll trade it live. It's always a lot of fun. We're going to have that for you. Tomorrow, Switch Markets live trading webinar. We're going to show you how to trade gold and silver. We did one of those last Thursday, backed by popular demand. We're going to do it again tomorrow. So there's a lot going on here. Be sure that you tune in tomorrow for the Switch webinar. If there is big breaking news, I'm just probably going to jump on a live stream. So go ahead and click back. I'm always putting things out on X as well. These are the times that make great traders. They really do. Keep an eye on your risk. Have your discipline. See the possibilities of what could potentially come our way opportunity-wise, but it has to calm down first. I don't want to see anybody just diving into the silver market and then getting chopped up and not having any more money to trade when the trades get really good. Last week was tough. Trade ideas were tough. We took it on the chin the last 72 hours because of this chaos. I don't really know what to make of it yet, but don't worry, we'll figure it out. We're like a bird dog. We're going to find out where those ducks and pheasants are. I promise you that. It's going to take us a little bit to figure it out. It feels like something's happening that we don't see. It's underneath. It's an underpinning. Something's going on. Is it Epstein? Is it the Epstein files? I don't know. We're going to find out. All right, everybody, I'm going to go ahead and sign off. I've gone on long enough today. If you have any questions at all, swing on over to howtotrade.com. Open up a free, and I stress free, account over there. It's not a trading account, but over at How to Trade. Open up a free account, send me a PM, say hi. Always glad to hear from you. And if you need anything at all in the markets with regard to complimentary expert advisors, if you want to get a trading account going, a free demo account on MT5, or check out some of our new content, check out Switch Markets on YouTube, and then also head on over to Switch and get a free account going, free demo. And when you're ready, move on to the real money. No shame in taking your time this year, but these things are going to get hot when these trades start setting up and going off. I think it's going to be in the next few days. It's going to be a lot of fun. All right, everybody, have a fantastic trading session. Watch your risk. Trade the action well, and we'll talk soon. See you.